G'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I bring you this Wednesday afternoon market recap. I'll begin with the NASDAQ. I'll then transition into the Dow Jones Industrial Average, followed by the S&P 500, and then give you my own opinion on what's happening with a select few in our top 12 individual trade lists. So what I'll do for you now is move into the NASDAQ. The NASDAQ today, as at the close on Wednesday, has produced that of an interesting candle. It is really the first candlestick that we have really set up since, of course, this date over here, the 23rd of October, which suggests potentially that of the beginning of a major slowdown for the NASDAQ. The NASDAQ has been, again, on a major rip to the upside. It has been a very strong advance as we've seen prices, again, push from that 6,300 breakout all the way up to the current levels that we're trading at as at the close on Wednesday, up at 6,716 points. We have built in 400 points on the NASDAQ relatively quickly over the space of about 2 months. Now, this candlestick, which is just developed on Wednesday, I've been waiting, of course, for some new pertinent information to bring to your attention. That information is as at the close today. This is what we consider that of a bearish piercing pattern, if not that of a bearish counterattack. It is somewhat of a blended series between those two, I guess, terminologies that we use when we apply them to two-day candlestick patterns. But it is suggesting that of a slowdown. I've been speaking about a slowdown taking place in the NASDAQ, also the Dow and the S&P for quite some time. Again, last week we saw, especially with that of the NASDAQ and the S&P, and then again a sudden push or secondary push to the upside. If we start looking at, I guess, some of these, counter markets as well, the S&P 500 is giving us another high wave spinning top with this dotted line up and around this resistance area. So again, we're seeing these little gaps between, say, for instance, yesterday and today's trading session, but we're not really seeing any true follow through. If I show you this on the industrial average as well, you can see how we got very close to this 23,532 bullish continuation entry. It's a dotted line on my screen because simply I'm not jumping into the diamonds up and around these elevated levels with the market being so overextended and overbought as it currently is. But even this doji candlestick, which set up today during Wednesday's session, this is the candlestick as at the close of today's session. It's not really giving us, I guess, a lot of confidence moving forward as to the immediate breakout of this very short-term sideways consolidation. If we just look at the price action over the past 1.5 weeks, it really looks as though we're trying to establish out of a stair-step sort of consolidation or pattern, which is obviously going to break to the upside. And yes, it does fit that sort of category. You can see also price action is still, of course, trailing above the long-term, or I should say the exponential moving averages, the 10 and the 20. But generally what happens is when we get these ADX readings as overbought and as overextended as they currently are, we're still printing at, just shy of 60 on the ADX itself. The CCI, the Commodity Channel Index, is still printing at 170. Generally what will happen, combined with, of course, those oscillators which are trying to turn down and have been relatively overbought for about 2 months at the moment, is that we will go into some form of a prolonged sort of sideways market move at best. I've got some lower targets on the Dow Jones Industrial Average down here at about 23,000. It doesn't have to happen, of course, but at the moment, what you want to be paying attention to is what happens around this rising 10 exponential moving average on the Industrial Average. What I am seeing, however, is a little bit of hesitation towards the next breakout. Simply right now, I would not be chasing the breakout above 23,532. And obviously, if you go through our top 12 list, we haven't seen all that many stocks this particular week, or at least over the past 3 trading sessions, which have really sort of broken out and continued to trend bullish, which again is a little bit concerning because we should be seeing this in terms of the market advance, and simply we're not seeing this. Now, if I go into the S&P 500 again, you can see this sort of tentative breakout, which took place during Wednesday's trading session. Now, again, this is a dotted line. I spoke about this over the weekend. And again, we just went through the natural ebbs and flows of the market and what to expect once we get up into these sort of final thrusts in terms of momentum. When we combine it, of course, with or in combination with these oscillating indicators. Again, you can see the stochastics crossing down. The RSI is printing divergence. You see the peak over here towards mid-October, and then this subsequent peak that we've just sort of hit a new all-time high, or at least an intraday session high on the S&P 500. And you see how the RSI is now producing maybe the second, if not third, consecutive lower high at the moment. This is all short-term divergence. Also, we've got the MACD, the moving average convergence divergence, which is trying to cross down. It did give us a cross more so towards mid, if not, I guess, mid to late October. And again, it's still in that sell signal at the moment. Now, I want you to understand this does not generate that of a sell signal. You shouldn't be running out and buying essentially a bunch of puts on the market themselves. But what you should be thinking about right now is the market essentially slowing. And really, that's what we're beginning to see. Generally, towards the end of moves, we see a bunch of gaps. and they start showing up across the board. Again, you can see on the S&P 500, this is dating back about 2.5 weeks ago. You see this gap over here, followed by that engulfing pattern, a very short-term pullback along lower wick, and then we've seen this secondary push to the upside, which has produced some of those divergent signals that I'm talking about. The gap, or the little intraday gap during Tuesday and Wednesday session, closed intraday today, but it did leave us with another spinning top candlestick. So again, this market, I mean, it can continue to move to the upside, but at the same time, it isn't all that wise to be chasing this market up around these elevated levels. You need to allow a lot of these trades to essentially reset before we can get carried away with a bunch of new bullish trades. And again, with the NASDAQ, this is the first sort of definitive signal that we've seen in quite some time. Again, going back really about 2 weeks ago, where it looks as though the handbrake, so to speak, is being pulled on the market. Now, I spoke about this over the weekend. What we wanted to look for in terms of the NASDAQ continuing to the upside is really seeing Amazon get a definitive close above this area at 1,106, and then to see a true confirmation, a continuation above this level. We're simply not seeing that as at the close on Wednesday, or through to the close on Wednesday for Amazon. Also, this also extended through to Google. We were waiting for Google to give us confirmation of a move above 1,066. Now, yes, it has moved positive over the past 3 trading sessions. We are up $8.92, but the candlesticks themselves, I mean, we've got a spinning top on Monday, a doji on Tuesday, and we've just got an ordinary sort of, just a white candlestick on Wednesday. So we're not seeing any overwhelming sort of momentum flowing into Amazon or Google at this particular point after those sort of favorable earnings announcements that they released last week. Now, obviously, tomorrow is Apple. Apple broke out prematurely above 165. This happened on Monday. Obviously, we're not in this trade at the moment. Again, we've got this long outside day engulfing bearish Morobozu candlestick, which established itself during Wednesday's trading session. We're not in a trade at the moment, but please pay attention to what happens for Apple. If Apple disappoints, or if active market participants begin selling Apple, I think it could be the impetus to see a lot of people selling also Amazon and Google, which is going to weigh heavily on that of the NASDAQ. We're starting to see the slowdown candlestick. I'm not talking about a reversal. At the moment, if we consider the past 4 days worth of trading, especially taking into consideration Thursday and Friday last week, we still have a really nice open window on the NASDAQ, which is being priced in at about 6,575. So this is a pretty, realistic sort of target in terms of a pullback on the NASDAQ if it chooses to do so. It will put us just below that rising 20 exponential moving average. Now, outside of that, I just wanted to speak to you very quickly about Goldman Sachs, because again, I've been waiting for some market information, or at least some signals in terms, or at least pertinent to individual trades, but also the markets themselves, which are giving us a little bit of forward-looking direction as to where these particular markets or individual shares may be moving. Now, that has potentially presented itself in Goldman Sachs. We've had a pretty neutral trade on Goldman Sachs above 247.72 on the bullish breakout, but also 234.26 on the bearish side. It looks as though on Wednesday that we've got the beginning of, that of a shooting star candlestick. Now, it's not a textbook shooting star candle, but it does take the formation of it. During this session, we got very close to that original breakout trigger. You can see on my screen 247.72. We got very close to it. We didn't hit it, but we did produce that long upper wick. So this is telling us that there are sellers essentially still around this area between 247 and pretty much down here at 236. So although it isn't a definitive sell signal, there sure is resistance still holding around this 246, 247 area. So think about that on Goldman Sachs. We don't have an immediate trade set up, but this is certainly a short-term bearish signal, which has just presented itself on Goldman Sachs. One of the trades that we're still in is IBM. It is more or less still moving sideways. This is, again, taking that of a stair-step sort of breakdown pattern. If we get any movements below really this candlestick here, which is Monday, you should see IBM pull down to 148.79, but a lot of that has to do with obviously how Apple moves tomorrow. So pay attention to Apple. I'm not sure at the moment if it is pre-market or even during the session or even post-market, but pay attention to when they release their earnings. I'll be back with you with another update in terms of that gap directional trade. But outside of that, today, Tesla reported their earnings. You can see the candlestick itself. Generally, we would call this a tweezer bottom because it is showing up at support. However, it's sort of inverse. We generally like to see a dark candlestick followed by a white candle, which would produce the buy signal around that macro support area. Now, at the moment, you can see that this is pretty much an engulfing candlestick which is taking place on Wednesday. It's not a perfect engulfing candlestick, but it certainly is, it pretty much negates all of the gains that were sort of made moving into that earnings call on Tuesday. So this is still looking relatively weak. If I change to these oscillating indicators, we have had divergence for quite some time, so that's relatively interesting. And even though we are short-term oversold, it looks as though the bottom may fall out of Tesla moving forward. So pay attention to this pivot down here at $314 or $315 per share. I will say I'm not going to short Tesla. The reason for that is because the markets themselves are still relatively healthy. And really all I'm expecting at this particular time is that of a sideways move or that of a consolidation, which is going to take us into, or at least down to lower levels, but not really factoring any major sort of material market retracements at this particular time. Now, again, as these individual candlesticks develop, and if we see any larger sort of fractals develop in terms of sell signals or even buy signals, I will bring this to your attention. But outside of that, it has been, again, a relatively slow week to begin. You can see Boeing Airlines continuing to move sideways. If I bring up Baidu, we're trying to back test this red box. Again, generally we will fill these open windows and then we will continue in the gap direction. So think about that when it comes to Baidu. Caterpillar is more or less unchanged. It's still moving sideways. COP is testing this upper resistance area. I would hold off personally on the breakout trigger above 52.60 at this particular point. The markets are really looking quite looking as if they are potentially on the precipice, especially given today's candlestick of some form of a pullback. So think about that when it comes to those breakout trades. I wouldn't be chasing any of those whatsoever. Again, I've mentioned, I was going to say Google, but we're getting a little bit ahead of ourselves. CVX is pushing back up into that red box. Goldman Sachs I've recapped, IBM I've recapped, and also Netflix is just still continuing to move sideways. Pay attention to the Bollinger Band squeeze. Now, as you can see on my screen, I'm bringing up the Bollinger Bands, and we are moving into a squeeze. So this is still favorably healthy. Unlike that of Goldman Sachs, how we've pretty much produced that of a shooting star, or at least that upper wick candle, we still haven't done such a thing for Netflix. We are simply moving sideways. So even if we do see a little bit of a pullback down to 190, then we start to see some white candlesticks. This is essentially going to be the back test of this pivot, which is coming in here at $190 per share. So we've got some things in the works, so to speak. It hasn't been all that much of an active week. At least through to Wednesday. Things might change if we see some major movements with the markets. But again, this is just a little bit of a warning at this particular point in terms of potentially, again, a legitimate slowdown. Because again, the S&P 500 tentative on the breakout. We're not really seeing any follow through whatsoever. Again, the gap up on the Dow Jones Industrial Average is spinning top candle. And this, of course, is really in supplementary to a lot of these other candlesticks, which is suggesting that of a slowdown. You've got another little spinning top here, another spinning top, another shooting star candlestick. And then if you go even as far back as the 25th, you're starting to see that of a one black crow as well. So there's a lot of warning signals over here. I believe complacency at the moment is quite high. But I think the major signal at the moment is that on the NASDAQ. And even though last time we got a very brief, very shallow pullback, it looks as though we may be back at these levels in a couple of weeks, at least just to close these open windows, which is going to allow those oscillators to reset, the ADX to reset, the CCI to reset, and of course to allow price to come back down and back test these rising exponential moving averages as new support, which will then lay the foundation for us as to when we will feel comfortable jumping into a bunch of bullish trades. So I hope that makes sense, everyone. If you have any questions, please email me. Outside of that, I'll be back with you tomorrow. Actually, I'll talk to you about gold and silver and also the US dollar index tomorrow. That's a trade we've been speaking about. It hasn't triggered yet, but it is getting very close to triggering, and I'll give you an update on that tomorrow, and I'll also speak about, or at least give you some more market commentary as well. So stay tuned, everyone. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.